Alrighty. Hello everyone. Bharat from Finamal Spirits again. Well, Finamal Spirits has now become rabbitcha money. What is rabbitcha money? Well, take a guess and write to us in the comment section, and we will see how right or wrong it is. That said, the last time we did a video, which is about a year ago, I'm very sorry about that, we talked about the concept of risk. Now we're going to talk about the concept of volatility, which is kind of similar to risk and much more perceived and felt by day-to-day investors, right? So let's proceed and try to understand volatility, its impact on investment decisions, and volatile asset classes like cryptos, and the pros and cons of it. Let's get started. I have my colleagues Suraj and Balaji with me. Welcome Balaji, welcome Suraj.
Hey guys.
Hi
Thank you
guys,
for having me here.
Balaji here.
Pleasure. Let's get started, Suraj.
Yeah, let's get started. Bharat, let's start with a very basic
Start.
question. What is volatility?
Well, to those of us who are somewhat mathematically inclined, standard deviation could be past standard deviation, could be expected standard deviation going forward, could be in terms of price, could be in terms of returns. That's volatility. And when we say volatility has gone up, it means the fluctuations have increased in terms of their size. Like, markets are moving wildly. So markets crashing is not same as volatility. Yep.
Okay. I would like to explain this in a very simple terms for our, retail investors and yeah, can you?
Okay. So let's put it this way, right? So let's say you have a house or a stock, and what if it moves 5% up or down on an average every day, right? I mean, some day it may be 3%, some day it may be 7%. That's a volatile asset class.
Yeah, that makes sense.
Super volatile.
Yeah. Balaji, are investors scared of volatile things? I mean, as an investor, should I be scared of volatility?
Okay, I mean, let me put it this way. I mean, we are all humans, right? See, volatility means risk, uncertainty, right? Like Bharat explained that, the markets are moving, randomly at different levels. You wouldn't be able to, predict where it's going to go, right? So there is an amount of uncertainty. So when there is an uncertainty, you would have that fear, right? The fear factor will be there. But at the same time, the opportunity is also there when there is uncertainty, right? So I would put it this way. I mean, even traditional markets has volatility, has risks, but there are investors who diligently invest into volatile markets, right? But I mean, irrespective, the downside, the maximum that you can lose is what, 100%, right? So as long as you can manage your risks very well, the downside very well, I think it should be okay.
Yeah, more volatility.
And couple of
means...
things there.
Yeah, go ahead, Bharat.
So, more volatility is actually more opportunity for a trader who has an edge on the market.
Correct.
Because
that's what I was.
Wilder movements means bigger profits. All right. Second, like Balaji referred, it's The max you can lose is 100%. What if your allocation to a super volatile asset is about 5% or 10%, right? So 100% of 5% is still 5%, right? But it can still make you a multi-bagger if you've done a good job of researching the investment.
Right.
Correct. Yeah. Now let's
let's
look
move
at
on.
Now let's look at high volatile assets like cryptocurrencies. Okay, which I think many of our viewers will be
Okay.
very interested. Why is Bitcoin or any other cryptocurrencies in general are so volatile? Bharat, would you like to answer this?
Well, there is two parts to it, right? I mean, let's fundamentally answer this question. What's the value? What's the correct value of a currency, crypto or traditional?
Nobody knows.
Fiat, right? Nobody knows, and it's the exchange that determines. You know, what's the correct value of the euro or the British pound against the dollar? We don't know.
Yeah.
I mean, there is nothing like stock valuation for, you know, there's nothing like discounted cash flows that we can do for currency, right?
Mm-hmm.
So it's just demand and supply, and a bunch of macro stuff like interest rates, inflation, and so on, right? So same with crypto. We don't know what's the right value is, right? That's one source of volatility, right? Because if we knew what the right value was, you know, things would gravitate to that. For example, you know, the traditional markets, like traditional currency markets, have this, right? So why should yen depreciate against the dollar continuously, right?
Mm-hmm.
That's because, you know, there is an interest rate differential, there is a inflation differential, and so on, right? However, you know, since cryptos are not used for real life transactions mostly, so interest rates and inflation metrics are not as easy to put a number against. This is one. Second is leverage. Some of the exchanges give crazy leverages like 100x, right?
Mm-hmm.
So people take it, which they shouldn't be, but people take it, right?
Mm-hmm.
And you know, then their stop losses trigger, right? And then there is margin calls and liquidation and so on, right? And this gives rise to a domino effect. So the moves are bigger than what they should be.
Yeah.
Yeah.
Yep.
Yeah. I
So
mean,
these are the two ways to think of it.
yeah. To add to that, I think the market maturity, I think it's still very young compared to the traditional markets.
That's also
And
true.
yeah, and it gives a larger window. It's like, 24/7, trading window. So the speculators, will be there all the day.
But
So
I
yeah,
would
I mean,
disagree. I wouldn't think that, you know, 24/7 trading would increase volatility. I would actually think, you know, it would smooth out volatility if at all.
yeah, but then again,
But
the other aspects around it. For example, most important thing I would feel is that the regulatory news, in crypto
right,
is like crazy stuff. It kind of increases the volatility like crazy.
correct, right,
Yeah, because there is no regulatory clarity there, and therefore
correct.
the uncertainty levels are even higher.
Yep, it adds to uncertainty.
Yeah, that's right.
Yeah. So in total, cryptocurrencies are volatile and there is a lot of uncertainties involved. Okay. My next question would be, why should anybody invest on cryptocurrencies? Bharat?
Okay, so uh, I think there's a potential for high returns, right? And it gives you a very good diversification, right?
Mm-hmm.
And it could be a good inflation hedge, and I mean inflation and the currency devaluation, and of course because of decentralization, right? It doesn't operate without any central authority, offering a different approach to financial transactions, right? And lastly, the innovation and technology in that, right? It brings in the different aspects of things. So, I mean, largely, I mean, I would put it this way that, it's something, which has higher potential in going forward. So, yeah.
Yeah, talking about the technology, I honestly agree with you.
Yeah, I mean, underlying technology and
yeah, yeah, the crypto
So
technology
the
and
point about the inflation hedge was actually fantastic,
right.
right? I mean,
Yeah.
traditionally people think gold is an inflation hedge, right? And
Yes.
it is, and it is. It's not untrue.
Yes.
However, I mean, just look at to what extent gold does a good job, and to what extent something like a Bitcoin or any other, good cryptocurrency, I mean, something that's not a toy project,
Correct.
you know, what kind of job that can do. For example, in the previous bull run, fueled by the Fed quantitative easing, right? Gold did well. Crypto did many more times better.
Better. Yes.
yes, yes,
Absolutely.
And later it crashed. So it's important to use it. I mean, if you're using it as an inflation hedge, it's important to know when to take the hedge off.
True. Absolutely. Yeah.
Also, I mean, the last point being, you could be living in a country where the currency is, even more volatile than crypto. So,
True. Yeah. 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 Of course, it's a um, good point that you made. Yeah.
yeah. There are many countries
alrighty,
which are experiencing it right now, right? Whole of South
absolutely.
America is moving into cryptocurrencies now.
Absolutely.
No,
Yeah.
it's a good idea because maintaining their currencies and against all those current account deficits and stuff is not easy.
Yeah. I mean, with the I mean, another thing I want to add is that with the recent entry by the fund houses to bring in the crypto ETF. I mean, there's like the Bitcoin
Right,
ETF and all that. So it brings
right.
in some kind of an assurance in the market, and therefore the institutional investors
Yeah,
bringing in
it's a little more of mainstream acceptance than
correct.
what was there before.
Yeah, that brings in a little bit of confidence, and then yeah, why not? Yeah,
Sure.
Yeah, talking about the technology, crypto exchanges have, like most forward and very high tech technologies for sure. But when it comes to normal user
Okay.
transactions and all, I mean, there's still a lot of evolution to be done um, for
Okay.
whether it may be a wallet to wallet transaction or adding a new network or adding a new token and all. It's still a painful thing. I think there's still a lot of improvement needs to be done on that side.
Oh, yeah, I mean that deserves one or more videos on
yeah,
its
Yeah,
own.
yeah, we
I
that's
can
mean,
correct.
we can definitely
it's
dedicate
not
an
directly related to investment,
yeah.
but let's do at least one entire video on that, and maybe
That's
if
correct.
needed
Yeah,
more.
yeah, yeah, yeah. See,
Yeah,
that's the reason why the adoption also is kind of taking a lower rate. Adoption rate is lower because of these aspects as well. Not just the investment option might be good, but the mechanisms in which you invest into is not very user friendly, right? It's not so easy. for traditional
I mean, that's again
user markets.
that's another reason for lack of enough mainstream adoption.
Exactly. So I think that deserves a separate video. I mean, like Bharat said, we probably can do that.
Okay.
All right. So I think we lost Suraj in between. I think we can continue while
Sure.
Suraj is trying to connect back. So,
Okay.
so I think, what do you think? What strategies can investors and traders use to manage the risks associated with crypto volatility? Now we spoke
Okay.
about the crypto volatility, and now we will have to tie the traditional strategies here. Does it really work? I don't know. We don't know. We probably discuss. I think it does, but let's discuss that. Just kind of.
No, it does work. It does work. So, I mean, just that everything is magnified here. The risks, the returns, everything is magnified.
Yeah, because of the leverage factor, right? I mean, quite high
Absolutely.
compared to the traditional markets.
So let's
Right.
let's look at it this way, right?
Hmm.
So if you are a long only investor, right, you're buying and holding,
Right.
and which is okay, but if you can take the volatility, that's fantastic. You don't need to do anything else, right? Just make sure that you haven't allocated 100% of your wealth here, right?
That's correct. Yeah.
That's one. So allocation is one area where you need to. I mean, I would say any investor who's investing into crypto to make extra returns, probably shouldn't look at more than 10% of the net worth.
Great. That's correct.
Allocate,
It's kind of
allocate.
diversification as I mean
Yeah,
on their asset classes.
right. So that's one. Second, if you've done that, you can also, if you're a trader, I mean, if you know trading, if you have an edge, or if you know somebody who has an edge, right? Or if you can write algorithms that have some kind of an edge, you can you can time your short trades using your asset as margin,
Right.
right? And if you do a reasonably good job there, right, you would have made some of the money that asset has lost on the short side.
Yeah.
So that's another idea. Then if you're a trader, right, there are many ways you can look at absolute return strategies. You can go long and short depending on what your indicators, charts, algos, fundamentals, technicals, they whatever tells you to take a direction. And interestingly, you can also take market neutral bets where the asset class itself, uh, whether if it suffers from a macro event like Fed increasing interest rates, will not touch you because you're long one asset and short another asset in the same asset class,
Right.
and you have diversified these long short bets.
Right. Yeah. You're basically hedging your losses.
Yeah, so diversification, hedging, short side bets, long short bets, market neutral
Hmm.
bets. Yeah, these are the ways.
Right.
Same thing as traditional.
That's true.
Just that, the risks are higher, the returns are higher, so probably needs more diversification than traditional does. That's how I would see it. I mean, I look at these things as numbers.
Right.
And guess what? Even a non-believer in crypto can trade it because you're not taking sides, or you're taking both sides. So
That's true. That's true.
Would you like to add
I
anything
mean,
about
even the
leverage here?
sorry.
Would you like to add anything about leverage? We were just talking about the leverage.
Well, I mean, so how much leverage you can take is a function of how diversified you are, right? Uh, if I'm not terribly well diversified, I wouldn't take a leverage more than 2x. And if I'm terribly well diversified, I would probably go up to 3x, 4x, and not beyond that. Okay, so I mean, people taking 50x, 100x, they're making the counterparty richer.
Yeah.
That's all they're doing.
Usually that's where people lose their money, right?
Yeah, but that being said, if you are taking a high leverage for whatever reason, right? Make sure you bet a very small portion of your net worth. I mean, if you're taking a 50x leverage, make sure you're betting less than 1% of your net worth, and you're okay.
That's true. That's true.
Correct.
Right.
Yes.
Yeah. Yeah. So, do you think the volatility of cryptocurrency will decrease as market matures?
Well, I mean, I looked at some historical data, and it's not conclusive. It's true to some extent, but I wouldn't say anything conclusively about this.
Right. I mean, of course, I think the factors that has increased the volatility, like if there is any regulatory clarity, like earlier we discussed on this, if there is, and more and more institutional adoption, right? Then then you will find some kind of lobbying towards making it more regulatory compliant, and therefore it gives you a little bit of security, and then probably it might lead to some kind of a stability. But the way the technological advancements things are there, I mean, it would probably, I mean, it would surely decrease, but I wouldn't say it would decrease to a larger extent. Probably, I might be wrong as well.
Yeah, I think we can talk about this a little more conclusively after we've gone through a couple more bull and bear cycles.
Yes, that's true. Yeah.
Balaji,
Yeah.
market maturity. What other developments or changes in the crypto space could lead to the stability in the market?
Yeah, I think I just mentioned that now. I mean, because the main thing is the regulatory clarity, right? I mean, this is one thing which leads to crazy speculations in the market, and that leads to high volatility. So that has to be there, and of course, the institutional adoption, right? Like more and more Warren Buffett kind of investors get into crypto markets. It would add in.
Who's a self-confessed non-believer, by the way?
Exactly. So, right. I mean,
Warren Buffett actually believes in Bitcoin.
Okay.
Yeah.
Well,
right. Believing and investing is different thing. Adoption, it has to translate to adoption, right? So, of course, and I mean, like earlier, Suraj, you were talking about the technological advancements. I mean, it has to be a kind of environment wherein the user experience for the traditional market investors to the crypto should be, more or less similar. I mean, it should be easy. If that happens, yeah. So that is some kind of a learning curve, or once the user gets hang of it, there will be more and more users. See, the simple point is one should know how to invest and take back your money. As simple as that. So as long as you're, it's that easy. In a traditional market, it is easier because well regulated and all that. So you know how to put in money and how to take back your money. So it's not so easy in the crypto market. I think when we do the other video, we probably address these things. But once that settles down, I think probably there will be more adoption, and then yeah, the market will start becoming more mature, and we would see some decline in kind of reduction in the volatility. So, but it is, I mean, it's not in the near future though. Definitely, I don't see it, but
Yeah.
it will happen
Yeah,
eventually.
considering the
We are in the right
complexity
direction.
of blockchain technology, even I think that's not going to happen anytime soon.
Right.
But good.
Yes, sir. And on that note, we will have to end this video here. Any closing comments before we end?
No. Uh,
Alrighty, we're somewhat out of time, but
Right.
we're gonna come back with more questions, more answers, more hopefully insightful things, and
Right.
we're not gonna recommend invest in this, invest in that. We're only gonna talk about techniques and whether something makes sense or something is nonsensical. And as practitioners, we preach what we practice. And
Right. Absolutely. I think we just touched upon the tip of the iceberg
yeah.
in the crypto world.
Yeah, there's still not a lot
So yeah,
to come.
right.
hope what we're sitting on is not a Titanic.
Yeah.
And
Exactly. It won't be, I think. Yeah.
okay, alrighty.
Okay, guys.
See you
Yeah.
guys, and do subscribe, like, share. It's gonna help us beat
Yeah.
the algorithms.
We
And
assure you that we come with more content more frequently, not as not this long gap. Hopefully,
alrighty.
yeah.
See you guys.
Thank you.
You.
Bye bye.
Bye.